Hello, everybody. It's me, Corval, here with you with a brand new show. It's called Rapid Fire News, okay? I'm going to be telling you about two major stories and an opinion piece that are going to set your week off right tonally if you're into crypto in general, all right? So join me and let's converse, brothers and sisters, in the comments below. Let's start off with our first story. So, major macro story this week. The Federal Reserve is expected to cut interest rates on Wednesday. I think Polymarket at the time of recording was saying something around a 91% chance of a rate cut. And CME Market Watchdog was saying about an 84% chance. So it's looking pretty likely. Now, normally, this would be a champagne poppin' news event for us, right, in risk assets. But the vibe this time is a bit tense, okay? Because of the recent government shutdown, several key economic reports like the October PPI report and even the November jobs report are not being released. The October one is never going to be released, they've said, and the November one isn't going to come out till next month, which is a little late for a Fed making a decision this Wednesday, right? So the Fed is making these decisions with incomplete data. The data they do have, though, points to a cooling labor market and rising unemployment. So what this means for us is that this cut isn't necessarily a mission accomplished cut, right? It's not like a celebratory, we beat inflation, everything's going great. It's we kind of have to do this. We're going to have to bite the bullet and cut. So, some analysts expect the Fed may restart balance sheet expansion soon if funding markets tighten, which would be a de facto quantitative easing light scenario. This is even more bullish for us in risk assets who are hoping for more money to flow into the economy and possibly inflate the value of what we're holding, you know? So, historically, lower rates and expanding liquidity like this is bullish for Bitcoin and Ethereum and everybody else. But where the money's actually going to flow this time, whether it's going to be crypto, AI stocks, consumer debt, it's anyone's guess. So I want to hear your predictions below. Let me know if you're pumped on Wednesday, okay? So, second story, a lot more crypto specific here. We're going to be talking about Tom Lee and Michael Saylor and how they just keep buying. This story, bullish, in my opinion. Our institutional whales are continuing to feast, guys. Michael Saylor bought 10,624 Bitcoin last week, and he spent around just shy of $1 billion for it, all right? $962.7 million. The purchase was funded by common and preferred stock, not debt. So what this means is even though MicroStrategy's market premium and MNAV have slipped recently, the signal is clear. They're still long-term bullish. There's still demand in the market for what Saylor is selling, which is Bitcoin, essentially. So, good news for us. Still a little spooky, right? I know everyone was a little frightened by, if Saylor was going to have to sell to fund his dividends, but things are still progressing according to Saylor's plan. We'll see how it plays out. The next up, we got his counterpart in Ethereum. We got Tom Lee with Bitmine. They added 138,452 ETH, worth about $435 million to their treasury. I don't know how they funded it. I couldn't find any information on it, but they did raise capital a little earlier this year, but their raise was smaller than this purchase. Okay, they raised about 300 million and they spent about 435. They're also claiming to have expanded their USDC or their cash holdings on their books. So we don't really have a lot of information on how that happened, but it's still a little bullish, I think. Okay, if they're still growing, we're still doing good. That means there's still a lot of demand and interest in ETH. Tom Lee cited two reasons for accelerating his purchase because he's kind of picking up the steam here. Number one, Ethereum's Fusaka network upgrade, and two, macro expectations. As we said in our previous segment, with the rate cuts and loosening liquidity, a lot of risk asset people are getting quite hyped up, quite ready for things to start taking off. Here's the salt to take with this good news, okay? Both firms are essentially locked into their accumulation heavy strategies. So who knows what it would take to actually stop Saylor or Lee from buying Bitcoin and ETH. Their business models depend on being long Bitcoin and ETH, but the size of their raises and their willingness to keep buying does show some ongoing institutional demand. So that's why I'm marking this one bullish. All right, boys. Next up, our final article, or final story I want to discuss for this week is crypto just a casino? If you're on crypto Twitter, even crypto Reddit, crypto whatever, You might have seen this opinion piece from Ken Chang H on X. He's a longtime builder who spent 8 years in the trenches and has most recently been working at AEVO. AEVO. So he starts the article off writing about how he got into crypto, right? He had read Ayn Rand, got really libertarian, like cypherpunk ideas, cypherpunk ideas, okay? Meaning he was really into self-custody, permissionless systems, financial freedom, yada, yada, yada. Things that no one seems to care about nowadays, which is kind of his main point. The main thrust of his article is crypto has been distorted by incentives. The zero-sum speculation dominates everything. Wealth is being destroyed and not created, okay? He's basically saying that innovation is being sidelined because casino-style products get all the attention. Derivative forks, copy-paste AMMs, predatory gaming mechanics, it's all over the place. You're familiar if you've traded any crypto, all right? Now, in my opinion, I think he's mostly right. I've been in this space about 4 or 5 years at this point, and even back then, it was starting to turn a little bit more, but the space was still full of weird nerds building cool little experiments. But now it kind of feels overcrowded with professional extractors, grifters, and the, launch a casino fork guys. But this is important. I think there's still a lot of opportunity left here. I think there's not a lot of technology like this. It's so powerful, it's so open source, and you can kind of fundraise and do all kinds of fun, crazy shit with your friends, right? So for me personally, I'm kind of, I'm on the Sonic chain ecosystem. I'm trying to get people to start building more fun and useful and genuinely new ideas. I'm not even anti-casino, but I want us to start thinking a little bit more long-term in terms of building something that can last. So if you build a casino, make sure it's fun and fair and maybe even subsidize some real innovation with it. So I want to know, what do you guys think? Is crypto doomed to be a gambling den, or is there still room for value creation? Let me know in the comments, and I'll see you guys later this week on GM Sonic. Bye-bye.